Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are down 55 basis points and we have about 2 hours left in trading. On the 1 hour chart we were at overbought territory on the 1 hour RSI yesterday, and on the MACD as well we do see there's a possibility we may turn negative on the 1 hour MACD. As for the 4 hour chart, we were at negative MACD, soon we're at positive MACD, but let's see if this reversal is still intact. Reason why, I see a resistance here at the 9-day moving average. We managed to close slightly above it, but not quite above the 50-day moving average. So let's see, in 2 hours we may close above the 50-day moving average. It's ideal for this reversal to occur. So let's see if this bull market is still intact. So at the moment, one could say resistance is at the 50-day moving average, or right at the price of $294.30. And as for support, we found support back in the 200 moving average right there, and at the price of $283. So if we were to move on higher, that price movement is roughly around 75 basis points, so not much of a movement to upside. And if we were to continue to move down lower, that price movement is roughly 3%. And let's head to the forecast model. On here I'll go day by day where the S&P 500 will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecasts we should focus on? Well, ideally the forecast that looks similar to the current trend. We have the current trend right here, and the trend that I compared it to is the best match is the August 3rd, 2007 to October 29, 2007. So I'll point out why these two charts are similar. So what we have in the beginning of the trend, we had a down channel, and then we proceeded to make a reversal and head on higher right here. And then we proceeded to break down to touch the bottom Bollinger Band right there. And after touching the bottom Bollinger Band, we see a possibility or an effort of reversion to the mean or touching the middle Bollinger Band right there. So we start to see similar patterns shaping right here. So in the beginning, we had a down trend below the middle Bollinger Band, and after that, we see it quickly reverse, remaining above the middle Bollinger Band right there, and then we see the same breakdown right here, touching the bottom Bollinger Band. Next, we see a slight reversion to the mean, touching the middle Bollinger Band right there, or an effort to touch the middle Bollinger Band right towards the end. So what we have is 1, 2, 3, 4 points, 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecasts should be the same as well. So again, the trend that we examined was 2007, August 3rd to October 29, 2007. Back then, the S&P 500 was down roughly 4.2%. And here's the line chart that I compared it to. We have the current trend, and overlapping it is the 2007 trend. So that is all. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.